China has had a good start to the year. The world's second largest economy expanded 6.8% in the first quarter. Its GDP exceeded $3 trillion.
Since the beginning of this year, we have maintained sound and stable economic development, made progress in transformation and upgrading, improved quality and performance, and seen a good start in economic performance.
Strong consumer demand was the main driver of growth. It accounted for 80% of the expansion. Strong exports also contributed to the rise, with shipments to the US jumping nearly 15% year-on-year. And that's as China and the US are in the middle of a trade dispute, with both sides threatening tariffs worth billions of dollars. China, however, on Tuesday said it will open its car market to foreign investment, scrapping the need to partner with local companies. But while China is offering a potential olive branch, Washington has banned US companies from selling parts to telecommunications equipment maker ZTE for 7 years. That's for violating sanctions by illegally shipping American goods to Iran. It's a potentially devastating blow for the company, which gets around 30% of its components from the US. ZTE is not the only one to suffer. Shares of 4 of its US suppliers dropped as much as 35% on the news.
Yeah, I think it's a really dire outcome for not only for ZTE, but for US-China relations. I think we're really still at sort of the beginning of this erupting war, technology war. The US government seems intent on punishing Chinese companies that may be benefiting from industrial policies, benefiting from the Made in China 2025.
Washington seems to be digging in for a longer face-off on trade with Beijing, and both their economies could take a hit. Liz Maddock, TRT World.
Let's go to Atlanta next, and for more on this is Jeffrey Tucker. He's the Editorial Director of the American Institute for Economic Research. Jeffrey, great to have you on Money Talks, as always. Look, so the IMF is talking about the risks to global growth. Meanwhile, China, strong growth over there. It should be good news for the global economy, but one reason that it's growing so strongly is that its trade surplus with the US is growing so much. Is this going to make the Trump administration even more determined to get tough on China?
I'm afraid so. It doesn't matter how much of a mess these guys make. They keep wanting to make it worse. You know, China is absolutely dedicated to globalization, commercialization of the country, high growth, and you're seeing the results. I mean, these figures right now coming out of China right now are just phenomenal. And just a couple of days ago, maybe it's yesterday, we got the announcement of the Hainan trade zone in the province is becoming a free trade paradise, you know, with medical tourism and even gambling. I mean, the entire country is addicted to commerce and developing its own markets. And this is the thing that concerns me most. First of all, the U.S. will not win this trade war. There's no question about that. And what we're going to give up, I say we, what the U.S. is going to give up is its trade relationships, its trade routes, its trading partners, and it's going to get increasingly isolated in the world and inspire countries and manufacturers in places like China to look elsewhere for its inputs and for its exports.
Indeed, you are right. I mean, China is actually reaching out to some of the US's allies, building what you might call a firewall against the US. But yes, let's look at those numbers in a little bit more detail. How reliable do you think those growth figures actually are? I mean, look, when you look at things like industrial production, urban fixed asset investment, these have not been growing quite as robustly, have they?
Well, there's always a problem with every kind of form of economic data. You can take it apart and poke holes in it. But I mean, you could see an ethos developing in China. First of all, I mean, these are, even the figures were a third less than what's being reported, that's still extremely high. The Chinese economy is vastly larger already than the U.S. once you adjust for the purchasing power index. And Americans don't know this, by the way. You know, Americans are completely oblivious to the fact that we're no longer number one. We're number two at best. And the prospects for China are just right now absolutely incredible. You see that all the political moves in China are completely dedicated to globalization, foreign investment, making it easier for people to come and invest, developing really good trade relationships with countries all over the world, in the region and all over the world. I mean, China's goal right now is to make every province just as beautiful and productive and attractive as the places like Singapore and Hong Kong. Those are the relevant comparisons today within China, within the politics of China. I mean, that is an extraordinary change.
You're absolutely,
and that's taking place right now, and it's completely. I mean, compare what's happening in China today with what's happening into the U.S. China's looking outward to the entire world for markets and for investment, and the U.S. The current ethos is drop out of trade agreements, call names to every other country in the world. Nationalize production. It's not going to work in the 21st century.
You're absolutely right, Jeffrey. I mean, they have been looking at the Singapore and Hong Kong models for years, and it actually does look like they're taking those models and scaling them up enormously, aren't they? I mean, but look, let's talk about this issue
with the right kinds of institutions, too.
Right.
I mean, low taxes, low regulations, everything.
Exactly. Let's just look at this issue of the raising of the cap on ownership of car companies. How much of a concession is that to the US? It's mainly really going to benefit Tesla, isn't it?
Yeah. It's not. I don't think it's a concession at all to the U.S. It's where China is going anyway. China wants to encourage, reward, and even incentivize all kinds of foreign investment. This is not a country and an economy afraid of foreign investment. They've come to realize that in today's markets, you need these kinds of relationships, and the more attractive you can be to foreign investment and foreign capital, the richer your population gets, and the more powerful you become. I mean, this is not rocket science, all right? but this lesson has been learned in China. I don't think it's a response to Trump.
ZTE, that whole issue, how much of an impact is that? Are the restrictions that the US and the UK making on ZTE? How big of an impact is that for China?
What it again underscores is the fact that China needs to develop more reliable trading partners. This is why it's a very bad idea for countries to engage in this kind of protectionism, these kinds of embargoes, and these kinds of restrictions, because all you're doing is punishing people in foreign countries for having relied on your product in the past. And look, I'm afraid. I'm not sure if Americans understand this. What's happening around the world today is that more and more companies and more countries are just saying, we have got to figure out a way to go forward, not sacrificing prosperity, but figure out a way to go forward without relying on the U.S. And this is a consequence of these kinds of trade policies. They're not making America great again. In fact, what they're doing is marginalizing America in the world economy today, and we're going to pay a big price for it. And I think we don't usually talk about politics on the show, but I think eventually the Trump and the Republicans are going to pay a big price, because it's his constituencies that are going to they're going to lose their markets, and they're going to be paying much higher prices for very important consumer goods that are good to the safety, health, and well-being of Americans.
Jeffrey Tucker, the American Institute of Economic Research, thank you very much indeed.